Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharrey. Thanks for tuning in. So, those of you who have kids, you probably remember the phase that I think all kids go through, where they ask the same question over and over and over again. You may be in that phase now if you have young kids. Mine are grown, but when they were little, the favorite question was always asked in the car. And this was both of them. They both did this. In fact, a lot of times they would just tag team it and go back and forth. And the question was, how much longer? Now, it didn't matter how far into the trip that we were. This question always came very quickly. We might not even be out of the neighborhood yet. And one of those kids is asking, how much longer? How much longer till we get there? When are we going to get there? How much longer? And so my wife at the time and we came up with kind of an amusing way to deal with this question. We would just answer 20 minutes. Didn't matter how much longer it was actually going to be. We always said 20 minutes. So we'd get the inevitable question, how much longer? Oh, about 20 minutes. And then, 10 minutes later, they'd ask the same question again. How much longer? Oh, about 20 minutes. And this was amusing and funny to us. It wasn't very effective because my kids weren't that dumb. So they very quickly figured out that we were just giving them the same random answer over and over again. But it was funny. And now it's kind of a family joke. But, my kids are grown now. And I'll be honest, sometimes I actually miss those dumb questions. But, life is a little bit different these days, but, not much, because I still get the same questions over and over again. I just get them from different people. It's not the same person asking the same question over and over again, but I do get a lot of the very same question from a lot of different people when it comes to the work I do here at Money Metals. So I thought today that I would take a little bit of time and do an Ask Mike Anything show and cover some of the precious metals questions and economics questions that I do get over and over again. Kind of the frequently asked questions of Mike. And I'll also sprinkle in a few that I solicited from social media. And before we delve into the questions, though, I do want to note that this week gold set yet another new record, and it eclipsed $3,100 an ounce. It feels like just yesterday, because it was just a couple of weeks ago that we were talking about gold eclipsing $3,000 for the first time. And I'll be honest with you, I'm a little bit surprised that we haven't seen a significant sell-off consolidation, given how quickly that the yellow metal has risen. But what we have right now is really kind of a perfect storm for gold. We have worries about de-dollarization. We have a growing realization, I think, that the economy is running on fumes. You're starting to see more and more people talking about recessions. We have persistent inflation. We have regime uncertainty with Trump and the tariffs. We don't know from one day to the next what policy is going to be announced or unannounced. And I think that when you take all of these factors together and then also the basic fundamentals, there's plenty of fuel left for this gold bull run. And so that actually leads to the first question that I've gotten a lot, and this is obviously lately, but a lot of people have asked me, are you surprised by how fast gold has gone up? Well, the short answer to that question is yes, I am actually surprised by the speed of this bull run. In fact, the meteoric rise is pretty unprecedented. Think about this. It drove from $2,500 an ounce to $3,000 an ounce in just 210 days. Now, put that into some historical context. Gold has taken an average of 1,700 days to reach previous $500 milestones. So going from $500 to $1,000 an ounce, $1,000 to $1,500, $1,500 to $2,000, an average of 1,700 days. And we just went from 2,500 to 3,000 in 210 days. So that gives you a sense of just how fast this is. And even a little bit of more recent context, gold first traded above $2,000 an ounce on August 4th of 2020. So we were at the kind of in the depth of the pandemic, right? It didn't trade above $2,100 until December 3rd, 2023. So it took 3.5 years to make that extra $100, that next $100 leap. Gold first traded above $3,000 an ounce on March 14th, and gold is already trading above 3,100 just over 2 weeks later. So, yes, it is a very fast upswing, and I am a little bit surprised by the speed. Now, when you step back and you kind of look at the factors and the fundamentals that are driving this, it's not as surprising because, again, we have this perfect storm for gold right now. And I don't see any reason for this bull run to run out of steam, so to speak. But I still think we have to be aware that at some point there's probably going to be a correction. We'll probably see some selling and profit taking. We'll probably see some big down days because any bull market typically climbs what a lot of investors will call a wall of worry, right? It goes up and then it'll drop and then it'll go up some more and it'll drop as people get concerned about various things in the daily news cycle. But the fundamentals driving this are just so solid and strong. And I think that helps account for the speed of which things are moving. Another question that I've gotten a lot in recent weeks, especially as we've seen gold really take this fast trajectory up, is what's wrong with silver? Silver has gone up, and don't get me wrong, silver's not done poorly, but it is not run up nearly as fast as gold. And for a little while there, when we were right around the $3,000 level, we saw gold pushing on the $35 level. But it has since sold off, and the gold-silver ratio is now back to like 91 or 92 to 1, which again is telling us that silver is underpriced compared to gold in historical terms. So why isn't gold catching up? Well, I think there's kind of two things in play. I think one thing is it's just easier for big managed money to kind of control the silver market using futures and shorts. It's a smaller market, and it is easier for, I hate to use the word price manipulation, but it's kind of price manipulation. They can buy and sell in large amounts and kind of hold silver down. Now, eventually, they will lose control of it. The market is always more powerful than these players. But I do think that's part of it. But I think another aspect of it is just kind of a historical reality. Gold has historically run a bull market faster than silver. In other words, silver tends to lag in a gold bull market. What we have seen historically is we've seen gold take off, silver lag, and then silver catch up later in the bull run. We saw this in 2008 during that big run up in gold. We saw it during the pandemic. And what happens is we get these really wide gold-silver ratios, and then it snaps back to that mean very, very quickly. So I wouldn't give up on silver at this point. Again, I've talked about this on the show. I think the fundamentals for silver are very strong. The supply and demand dynamics are very strong. We have relatively short supply. We have increasing demand, particularly in the industrial sector. And I think that eventually, if history is any indication, we should see silver close that gap. But it is not unusual. What we're seeing in silver kind of acting as a laggard isn't really unprecedented from a historical standpoint. It's kind of par for the course, so to speak. So I think really if you're kind of looking at it from an investment standpoint, this is a buying opportunity for silver because you still have silver very underpriced compared to gold. And so I think if you're kind of looking at the metals, that might be something to take into consideration. Again, past performance is not necessarily indicative of future performance. So you always have to be careful. You have to look at the fundamentals. But what I really want to emphasize here is that it's not unusual for silver to lag behind gold in the early stages of a gold bull market. And I think we are still in the early stages of this gold bull market. I agree with several analysts that I've talked to in recent weeks who say that they think this is what is known as a secular bull market. It's going to have a run of many, many months, simply because of these dynamics, particularly with the state of the dollar and the rapid deterioration and valuation of the dollar. So don't give up on silver. That's the moral of the story. Another question that I get a lot from folks is, where is the best place to store your gold? And that's a hard question to answer. And, some of it really comes down to personal preferences. There's basically two options. You can store the gold yourself. You can keep it in your home in a safe, or you can have your precious metals stored at a bullion depository. And there's pros and cons to both of those. I think from the most fundamental level, I like to have my metal in my hand, right? There's a saying that if you can't hold it, you don't really own it. And I think from a fundamental basis, I totally get that. Part of the reason that we want to have gold and silver is we want to eliminate or minimize counterparty risk, right? Counterparty risk, in simplest terms, is really just the possibility that the party on the other side of a transaction may not fulfill its obligation. So, like if I loan you $200, there's a chance that you won't ever pay me back. You are my counterparty risk. Most transactions and investments involve some level of counterparty risk. So if I invest in a stock, there's the possibility the company will go belly up. If I buy a government bond, there's a chance that the issuing country could be overthrown. If I rent out my house, the tenant may just stop paying. So these are all examples of counterparty risk. Gold and silver, in and of themselves, do not come with any counterparty risk. There's nobody on the other side of the transaction, right? If I have fiat dollars, I have counterparty risk because there's a government on the other side that's issuing that fiat currency. Gold is money in and of itself. Silver is money in and of itself. I'm not depending on anybody else out there to give it value or to fulfill some obligation on the other side of this transaction. If I have gold, I have money. I have it in my hand. There's virtually no counterparty risk at all. When I introduce storage, then I'm starting to introduce some counterparty risk. So then it becomes a question of what's the best way to minimize that. And again, I think the kind of obvious answer to a lot of people is, well, just keep the gold in your home. But that's risky in and of itself. I'm not a big fan of keeping a bunch of, money, gold, silver, valuable stuff in my house. I've read too much true crime, I guess. And I know that no matter how well you think you've hidden something, a thief is going to find that hiding place. They've thought of it, right? And I've heard these horror stories. People have these huge safes and they think, oh, I'm safe. I've got all of my valuables in this safe. And they just roll the safe out to the car and figure out how to break it later. So, there's always risk of holding gold in your home. And you just have to be really aware of that. There is the possibility of thievery. And if you are holding gold in your home, you definitely want to make sure that you're taking security measures to protect the valuables that you have in your home, whether it be a dog, a security system, a really well-built vault. You have to take these things into consideration. You can't just think, oh, I'm going to find this great hiding place for my gold and the thieves will never find it. Dangerous. So the other option, of course, is depository storage. And, again, that does introduce some counterparty risk. You have your gold in somebody else's hands. And at that point, it becomes a matter of trust. And I do know that there are very trustworthy bullion vaults out there that will store your metals. I'm going to pitch Money Metals, obviously, because it's a company I work for, but I do believe in them. I've seen the measures that they've taken to ensure that people's valuables are protected and well taken care of if they're stored in our bullion vault depository, which is in Idaho. It is actually the largest vault, I think, out of New York. Bigger than Fort Knox. It's a huge vault, and there are multiple layers of security. There are multiple layers of audits. And so all of these things together means that you can trust having your gold stored in those bullion depositories. And there are others out there. Some people recommend that you kind of spread your gold out. If you're going to store it in depositories, maybe have some in your own country and then have others in a jurisdiction outside of your country. So maybe you have some of your gold stored in Switzerland. Again, you want to make sure that you are dealing with a trustworthy depository that is going to have all of the security and audits in place. Do your research, right? That's the key. Do your research, find somebody that you can trust. And, maybe you want to spread your gold out. You might have your gold in 2 or 3 different bullion vaults and have some of it in your home. So there's a lot of different ways you can approach it, but you always have to kind of weigh the various risks and the various rewards, so to speak, when it comes to storing your precious metals, because there are advantages and disadvantages to the various storing options. So here's another question while we're on the subject of depositories that I've been getting a lot lately, and that's because it's been in the news, and that is, do you think the gold is really in Fort Knox? And of course, we've been hearing about, auditing the gold, and there's been kind of a push for that, which I think is a fantastic idea. Why would you not? And so the question is, do I think it's in there? I honestly am inclined to think that the gold probably is there. The questions that I have would run more along the lines of what kind of encumbrances are on that gold. How much of that gold has been leased to other parties, or has been loaned out, or has other claims on it? And that's part of the audit. It's not just about going in and counting gold bars. When you do a thorough audit, you look at all of these paper trails. And I would not be a bit surprised if a lot of America's gold has other claims upon it. And that would really be an important part of the auditing process. And, on the whole subject of auditing, you'll hear some people say, this is dumb. It's just conspiracy theories. And here's the question, though. Okay, then why not do the audits? Right? Well, people say, well, they do audit the gold. Well, yes and no. They audited the gold many, many years ago, and then they put seals on the various chambers of the vault, and they audit the seals. They're not actually breaking those seals and going back into the vaults. And again, the thing about audits is you don't just do it once and walk away. When you are doing auditing, it's basically constant, and it involves multiple levels. You have internal audits, you have external audits, you have paper audits, you have physical audits. All of these things should be going on. It's what we do here at Money Metals with our bullion vault. We have a constant auditing process to make sure the gold is there, where it's supposed to be, and that the paper trails are all correct. And if you're not doing that, then you're just introducing risk that something could be wrong. I don't understand the resistance to auditing it that you hear out there in the mainstream sometimes. When people tell me, oh, we don't need to do this, we don't need to have a thorough check of something, it makes me suspicious that they're trying to hide something. But again, answering the question, I'm inclined to think that the gold is in the vault, but I would not be surprised if there weren't some shenanigans in terms of, the paper trails and the encumbrances that are on those metals. Okay, here's another question that I get quite often. Are ETFs a good way to invest in gold and silver? Before I answer the question, I probably should explain for those who may not be familiar what exactly we're talking about when we say ETF. ETF stands for Exchange Traded Fund. It's basically a fund. It's backed by a trust company that holds metal that's owned and stored by the trust. And in most cases, investing in an ETF does not entitle you to any amount of that physical gold. You own a share of the ETF. You don't own gold or silver itself. So it's basically paper gold. It's representing gold. And it does tend to track with the price of gold over time. If you have an investment in a gold ETF, it will tend to go up as the price of gold goes up. It will tend to go down as the price of gold goes down. So it gives you exposure to the gold price without actually holding and dealing with physical metal itself. So ETFs are definitely a convenient way to play the gold market. But again, I can't emphasize this enough. Owning ETF shares is not the same as holding physical gold. So we talked about counterparty risk already. You're introducing a great deal of counterparty risk into the whole ETF system, right? That's not to say that they're a bad thing. And, I would always recommend, and again, I'm not really an investment advisor, so, this is just Mike's opinion here, but I believe that you should, if you want to expose yourself to precious metals, my philosophy is get the metal first. Hold physical gold and physical silver, whether you store it yourself or store it in a bullion vault, but have that physical metal. Then you can use ETFs because, again, they're convenient ways to play the gold market. They're liquid, right? You can buy or sell an ETF with a couple of mouse clicks. You don't have to worry about transporting or storing the metal. So you can play the gold market or the silver market without buying full ounces of metal at the spot price. So it is convenient. I think a lot of people like the fact that you could, just put $100 into a gold ETF. You have exposure to the gold price, and you're not having to fork out over $3,000 for a 1 ounce silver coin. So it does kind of lower the barrier of entry into investing in gold and silver. And, since basically what you're doing is you're buying a number in a computer, or you're buying a piece of paper, you can easily trade your ETF shares for another stock or cash it out whenever you want, even multiple times in the same day. And that's not something you're going to be able to do with a silver bar or a gold coin. So many speculative investors really like ETFs because they can take advantage of this liquidity. They can look at the trajectory of today's news and say, I think tomorrow gold's going to go up, and buy some gold ETF shares. And then you think, it's going to go down on Wednesday, so I'm going to sell. It's much easier to play the market that way. But again, you don't actually have gold and silver. And there's no guarantee that the ETF is actually holding the gold, right? I mean, you assume they are, you hope they are, but you don't know that they are. So again, in my view, you want to have physical gold and physical silver first, and then you can use ETFs to kind of as a supplementary if that's something that you're interested in doing. And if you're wanting to play, the daily price movements and kind of do the speculative investing thing, ETFs are great for that. But again, as far as preserving my wealth, providing myself with financial security, I want to know that I actually own the metal. And that's just kind of my philosophy on it. But there's definitely a place for the ETFs in the investment landscape. So that is ETFs. Okay, another question that I get quite often is, do you think that the dollar is really going to collapse? So we're hearing a lot lately about de-dollarization, and I just wrote an article. I'll put it in the show notes page, but I published it, I think, on Monday, talking about more progress with the BRICS nations as they're working to create their own cross-border payment system that would kind of bypass the dollar-denominated SWIFT system, kind of bypass the dollar. And, this is a big problem for the United States because the fact that the world needs dollars to conduct trade allows the United States to keep producing a lot of dollars. I believe that the fact that the dollar is the world's reserve currency really facilitates and enables the bloated U.S. government that we have today, a lot of the borrowing and spending would not be possible if there wasn't such a demand for dollars. The money creation would lead to hyperinflation without this dollar demand. So obviously, if we're seeing de-dollarization, if we're seeing less need for dollars, that's a problem for the U.S. government because it's lowering the demand. And as the U.S. keeps creating more and more currency, that currency devalues. This is what we're seeing in this inflationary environment. It's a devaluation of the dollar. It's not even so much, you look at the $3,000 price of gold, it's not even so much that gold is going up as it is that all of these fiat currencies are going down in value because governments keep producing more and more of them. But do I think the dollar is actually going to collapse? Do I think we're going to wake up tomorrow and we're going to read in the paper, oh, the dollar is no longer the reserve currency? I'm not that apocalyptic, but I do think that the role of the dollar is going to continue to diminish. De-dollarization is a thing. There is clearly less demand for dollars. You can look at it in the reserve makeup. We've seen a big drop in the amount of dollars held in reserves, and we're seeing an increase in gold and other currencies. Talk a lot on the show about the central bank demand for gold that's helping support this gold bull rally. We've seen central banks buy over 1,000 tons of gold 3 years straight. And before that, the average was less than 500 tons per year. So central banks are really stocking up on gold, and they're using it to replace dollars. So there's definitely a diminishment of the dollar's role in the global economy. I think that's going to continue. I think the dollar is going to continue to erode. I tend to agree with analysts who believe that we're kind of heading towards a multipolar world where we have lots of different currencies used in reserves. We'll see a mix of euros, yuan, gold, maybe even crypto coming down the road. A diversification of reserves, which means less dollars. And while that's not as cataclysmic as a collapse, it is still a big problem for the United States because, again, the U.S. depends on that demand for dollars. And as that demand diminishes, more and more of those dollars are going to, quote unquote, come home because nobody out there needs them anymore. And that's just going to be more and more price inflation and asset inflation for us. So I think the de-dollarization is a big problem, not so much because the dollar is going to collapse or go away, but because it's going to become less significant in the world. And that is going to create a lot of problems in the U.S. economy because, again, big government, borrowing and spending all depends on that demand for dollars. Somebody on Facebook asked me this just yesterday. How fast do you think they'll roll out central bank digital currency? And that's a really good question. I think there's kind of two prongs of central bank digital currency. I think one is going to roll out much faster than the other. I think the central bank digital currency that's going to develop very quickly is the currencies that are used for these cross-border payments. By using digital currency, it allows trade to be done more quickly in a country's home currency. So in other words, if Russia is trading with China using digital currency, they can trade in yuan and rubles. In fact, already, I think I read this the other day, 95% of all of the trade between China and Russia is done in yuan and rubles. They've completely squeezed the dollar out of the equation, right? As it is now, virtually everything is converted to dollars. These cross-border payments are done in dollars and then converted to the other currencies when they get to the other side. And this type of central bank digital currency allows that to be bypassed, again, enhancing this de-dollarization that I was just talking about. There's also the aspect of kind of a consumer central bank digital currency that's for the citizenry. And I think that's going to be a little bit slower to roll out, at least here in the United States. Some countries are already experimenting with it, including China. I believe there's some countries in Africa, maybe Nigeria, that rolled out a central bank digital currency for consumers. I think that's going to be a little bit slower because there's still a lot of resistance to it. It's interesting because a lot of states have been considering laws to try to thwart the implementation of central bank digital currency. Several states have basically said we're not going to consider central bank digital currency money within our state's financial system. So not clear how that would play out in practice, but it goes to show there's a lot of resistance to forcing central bank digital currency on the citizenry. Why? Well, because I think a lot of people recognize the inherent privacy issues, right? If the government is controlling completely this currency, then they can monitor all of your spending and they can turn it off. If they, you have think the wrong thing, say the wrong thing on social media, whatever it is, they could turn off your ability to transact business with the central bank digital currency. That makes a lot of people very reasonably nervous. So I think there's a lot of resistance to that here in the U.S. I could definitely see a situation where there's some type of crisis, and that would be the excuse to roll out central bank digital currency. I don't know what that would look like, but I do know that governments have a propensity to use quote unquote emergencies to get things that they want done. We saw that in spades after 9/11. The Patriot Act was basically a laundry list of things that law enforcement had been trying to push through for years for the quote unquote war on drugs. And the 9/11 attacks gave them the excuse to roll out a lot of these police and security kind of things that people weren't going to accept under normal circumstances. So that is kind of the avenue that I would see for central bank digital currency, some type of an emergency situation. Another common question that I get is, should I invest in gold or should I invest in silver? And my answer to that question is, why not both? And in fact, I do think it's wise to invest in both. I'm a big proponent of diversification in investing. I am very much a believer in you don't want to put all of your eggs in one basket. I'm not the guy that's going to tell you to sell everything and buy gold. I think you should have gold. I think gold should be a significant part of your portfolio. I think silver should too, but I'm not exclusive to that. That's just not the way my brain kind of works. I think it's important to recognize that gold and silver are in some ways different. Silver is much more of an industrial metal. It is going to have a lot more volatility in the price, a lot more ups and downs, but fundamentally silver is money. It is a monetary metal, and it does tend to move with gold over time. So that's why we talk about the gold-silver ratio. This shows the relationship between gold and silver, and the fact that this relationship can be, shown in a numerical way shows that there is a relationship between these two metals. It will get wider, it will narrow, but it tends to settle in around 40, 50, 60 to 1. And as I mentioned earlier, right now it's like over 90 to 1, which tells us that silver is underpriced compared to gold. But all of that to say silver is different, right? It's not the same as gold. They're different investments. For me, kind of thinking in a macro way, I look at gold as kind of my long-term wealth preserver. I want to, if I'm going to hold cash for a long period of time, I want to hold it in gold to shield myself from the devaluation of the dollar. Silver to me is kind of my apocalypse metal, right? It's what I want to have if the economic system starts to break down, because it's going to be much easier to barter in silver. In fact, I've taken payment, in recent years in silver before, because it's just a convenient way to pay. And I like to have silver, so I will gladly, if somebody wants to pay me for a project in silver, I'll definitely take it. But from a physical standpoint, it is a little bit easier to do business in silver because it is lighter. It's hard to make change for a 1 ounce gold coin. That being said, we are seeing some innovations, things like gold backs, the advent of digital transaction technology that does make gold easier to use in transactions. But all of that to say these are different metals. I think you should hold both in your portfolio. I think there are times that it's better to focus on gold. It's times it's better to focus on silver. Right now I'm looking at silver because it is so underpriced historically compared to gold. I think silver is a good option for folks who want exposure to precious metals, but maybe don't have, $3,000 on hand to buy an ounce of gold. You can buy a lot more silver with a smaller amount of money. I will mention, though, that, if you're interested in getting into precious metals and you're thinking, I just don't have this big chunk of money. I don't have the money to invest. I don't have that liquid, cash on hand. Then there is an option through Money Metals where you can actually build your gold and silver portfolio over time. It's a monthly installment plan. You can set it up for as little as $100 a month, and you can actually, just send Money Metals $100 and you're going to get $100 worth of gold or silver, however you set it up. So it's a great way to just build it over time. If you don't have a big chunk to start with, you can build your portfolio through this monthly installment plan. So check that out over at moneymetals.com. But yeah, gold, silver, both. Another question that people frequently ask me is, hey, Mike, how did you get into precious metals? And the answer to that question is really, I got into economics. And that's really just because I'm a nerd, to be quite honest. I do have an accounting degree. I did take economics in college. I enjoyed the subject and then kind of set it aside for about 10 years. But when I started getting back into economics and I started reading in particular the Austrian economists and started learning about the business cycle and monetary policy and the way governments manipulate money and the reason that governments wanted to get away from a gold standard. They didn't like the fact that the gold standard constrained them, that it made it more difficult for them to create money out of thin air. It made it more difficult for them to borrow and spend. That really sparked my interest in gold and silver because they are real money. So my interest in precious metals really comes out of my broader interest in economics and politics. I've often said that the monetary system, the Federal Reserve, is the engine that drives the biggest, most intrusive government in the history of the world. And some people argue, well, there's been bigger governments. I don't know that there have. If you look at the power and the scope of the U.S. government and its dominance in the world, I don't know that there ever has been. Maybe Rome, maybe the British Empire, but I think that's debatable. Regardless, the U.S. government would not be nearly as big. It wouldn't be borrowing and spending as much as it does if it didn't have a fiat money system, if it still stuck to a gold standard. A gold standard restrains government. And that's why governments don't like it, because they don't want to be restrained. Again, my interest in gold and silver really stems from my interest in economics, because gold and silver are real money. They have been money for 5,000 years. And this paper that they're showering on us, an increasingly large amount, is not real money. And it's very important to recognize that. And so, yeah, that's my interest. Okay, so here's a good question. If you could wave a magic wand and make the masses understand one thing about economics, what would it be? I don't know that I should have the power to be able to go around waving magic wands. I'm just going to throw that out there. But if you're going to give me that power, one thing that I wish I could make everybody understand about economics, I think it would be that there are always unforeseen consequences to any policy, and you have to consider those unforeseen consequences when considering implementing said policies. And really, this is a reflection of something that Bastiat, the famous French economist and philosopher, said. He said, a good economist always takes account of what is seen and what is unseen. And quite frankly, most people ignore the unseen. So, for instance, minimum wage, I think, is a good way to illustrate this. what is seen is that you have a minimum wage. So everybody's making more money, right? That's what everybody focuses on. If we just had a $15 an hour minimum wage, that would help so many workers. It would raise everybody's standard of living, or people will talk about a living wage. But there is an unseen side of that. And that's all of the people who will not be able to get a job at that higher wage. It's basic supply and demand. And when you raise the price of something, you lower the demand for it. And this is as true in labor as it is in anything. So you have to consider the unseen consequences of the minimum wage policy in order to determine whether it is a good policy or not. Simply saying, well, obviously people are going to make more money, that is not the whole answer to the whole question. And this is so true in so many different things. People fixate on what they can see, what is obvious, and they don't consider the unforeseen consequences, the unseen things. Tariff policy, great example. We can see the benefits of tariffs, but you also have to consider the downside of tariffs. Talk about global warming. Let's say we believe in global warming. Even if we do, what economic steps are we going to take to minimize global warming? And what consequences will that have on people? I mean, in some cases, it might be worse than the climate change. And I'm not saying that I necessarily believe that man-made climate change is a thing. I don't even want to get into that. But the point is, when you're considering these kind of policies, you have to also consider the unseen. You can't just focus on the seen of any policy. If I could make the world understand that, I think we would be a whole lot better off when it came to debating various policies. All right, I think I'm going to end it on this one. Somebody asked me, what do you think is the biggest thing people in the mainstream miss when it comes to the economy? And there's a lot of things that people miss, but I think the biggest thing is the role of the Federal Reserve, the role of monetary policy in the economy. I think most people put far too much weight on the policies of a given political party or a given president or a personality, and fail to recognize the underlying monetary policy that these fiscal policies are operating on top of. You hear people blame Biden for inflation. And certainly the borrowing and spending during the Biden administration exacerbated inflation. But the real culprit is the central bank. Without the central bank creating money out of thin air, you wouldn't have the inflation that we do. These government policies, these fiscal policies operate within a monetary system. And what is going on with that monetary system is extremely important. I don't think most of the mainstream really understands the business cycle. And if you don't understand the business cycle, you're going to miss a lot. If you don't understand how artificially low interest rates and money printing are impacting the economy, then you're going to miss a lot of what's going on. So I think with that, I'm going to wrap up this episode of the Midweek Memo. I do want to encourage you, if I have raised even more questions about investing in gold and silver, talk to a money metals, precious metals specialist. Call 800-800-1865 and talk to those folks. They can answer your questions. They can help you understand how gold and silver will fit into your investment portfolio. They can help you figure out what products might work for you. They can answer other questions that I may have raised in my discussions today. If you're interested in our installment program, you can talk to a precious metal specialist about that. So give them a call today, because you do want to have precious metals in your portfolio. I can't imagine why you would not. And a lot of people don't. But I think it is a foundational part of preserving wealth and growing your wealth. So do that today. If you don't want to talk on the phone, you don't have to. You can go to moneymetals.com and chat with a precious metals specialist right on our chat. Or if you know what you want to buy, just go to moneymetals.com and pick up what you need. So that is a wrap for this episode of the Money Metals Midweek Memo. You can get more information about everything that I've talked about on the show and a lot more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your inbox, make sure you sign up and get on our email list. Of course, you can subscribe to the Midweek Memo on your favorite podcasting platform. And when you do, you'll also be able to tune into our Market Wrap podcast every Friday, where you'll get a quick overview of the week in precious metals, along with conversations between yours truly and interesting people from the world of gold, silver, economics, and investing. If you like the show, please do me a favor and go to wherever you listen. Give us a good review. Give us those 5 stars. Share these episodes. That will help grow the show and extend our reach and educate more people out there. So if you would do that, I would really appreciate it. I appreciate you listening to the show. I hope you have a fantastic rest of your week, and I will be back to talk to you again next week.